can go live a
Yeah,
minute late.
we are going live. It's going live right now. Here we
Oh, it
are,
is.
guys.
Okay.
Yay.
Hi.
We're a little
Yeah.
early, so we'll just wait for everybody to catch up. Nicola here. I'm joined here
Yeah.
with Teresa. You can see to my left. Is it all right? Or
On my screen, I'm on your, I have no idea. That's like on a ship, right? You're port and I'm starboard, the way I'm looking at it. So.
okay. Awesome. So, hey guys, we would love to hear from you. Say hi in the comments. Let us know that you're there. We are a brand new channel. Today, we're going to be looking at technical analysis of the market, specifically should you buy or sell, and also looking at the charts, the different coins that we cover, and specifically looking at when do you enter and why. We'll run down the full menu or agenda for today in just a moment. But anything you want to say there about those beautiful paintings you have in the background, Teresa, before we get started and while we're waiting for people to
Yeah.
join us?
The first thing Nicola noticed, I usually have 2 on the wall behind me, and suddenly there were 3. That was my weekend painting project. So yeah, I'm amongst other things, gardener, swimmer, hiker. I occasionally paint. So that
This is
was
one of
just
her
my fun.
paintings behind there. Oh, there's another one there as well.
Yeah,
We're looking at turning them into NFTs and teaching you our journey. So who have we got here? We've got Nabil, Fama. I don't know if these are your first names. Hey, Jeffrey's there. Hi, Jeffrey. Number of
Hi,
people there,
everybody.
so say hi. I've got my what do you call that? The chat here, and then you're here. So this is going to be a little bit weird. So let's talk about the agenda of what we're going to do today. The whole point of today is, should you buy or sell right now? A lot of FUD in the market around this next fifth wave of the Wyckoff. We're in that distribution. Are we going to drop further? Yet the markets are showing there's a bit of a rally, which traditionally happens on a Wednesday. But so we're going to be talking about that. So we want to go over 5 points that you need to look at, consider before entering a leveraged trade with margin, right? Do you want to quickly just briefly say the difference between that while I'm getting my notes here, Teresa?
Sure. You want me to run down the 5 points or talk about the difference between a margin and a spot trade?
Yeah.
Okay.
The second, yeah.
So we think this is really important because as soon as you're doing a leverage trade, you're borrowing money from the exchange, or the exchange's lending agent in some cases. The risk of that trade goes up exponentially. The more leverage you use, the higher the risk. The tighter the stop losses you use, the higher the risk, right? So you're in a much greater world of risk as soon as you're doing leverage trades. Spot trades, all you're risking is the money you put in the first place, right? So in the world of leverage trading, understanding risk management and understanding when you want to take a trade and when you should just be waiting the market out is one of the most important skills a trader can know. And this is actually where mindset becomes really important, because FUD and FOMO can cause you to lose a ton of money. That's why we do so much work on mindset on this channel. So we came down with our top 5 list of things that you want to make sure you're checking or thinking about before you enter a leverage trade. And that's what we're going to talk about on today's call.
Exactly. And the first one is strategy. And we will go over our market analysis now as well while we're talking to you about the strategy. So the first thing I'm going to do, feel free to ask questions as well. We'll try and look here to answer them at the same time. It's all a bit harrowing because of the software we're using is not a handy. So the first thing is, what's your strategy? Do you want to have a talk about that? The different levels of strategy, Teresa? Have a strategy. Don't just go blindly into the market, right?
Yeah, I think one of the things that trips most traders up is we all say, oh, I have a system, I'm trading or whatever. And then we deviate from our system. We don't have a strategy, right? So know what kind of trader you are and have rules for yourself, right? So scalping is a whole different world from pattern trading, for example, right? Like anything on a really tight time frame is considered scalping. If you're trading patterns, have rules. I actually write my rules down, but have a set of rules for yourself on what time frame you're trading on, what type of patterns you consider acceptable to trade, because some patterns have a much higher probability of breaking in certain directions than others. But have it written down and stick to it, because if you're changing your strategy every time the market changes, then your risk management's way out the window.
Mm. Yeah. And so the strategies are you trading a pattern, or are you trading a bounce or a trend reversal, or are you trading some kind of an indicator or a signal in the market that says we're going one way or the other? Or are you, no, we've said that, that's it. So those
or
are
some
the
combination of the above.
yeah,
right?
exactly.
Like,
Yeah.
because you might be trading a pattern, but you use indicators to help choose your entry points. So
yeah. And when
you're
you're
doing
beginning, which is when we began, right? When you're beginning, trading patterns is probably more profitable and a lot less risky in a risky environment, because there is a methodicalness to the pattern. And when we first started trading, we made up a song. Because we had a friend that was losing money, and I kept saying, well, what pattern are you trading, what pattern are you trading? And in the end I just started singing the song to Bob Marley's
yeah,
No
you
War,
got to
No
sing
Cry.
it for us, Nicola. It's such
That
a
right,
sweet
yeah,
song.
I would just go, I'd go into her ear and I would say, no pattern, no trade. No pattern, no trade. So anchor that in, sing it with me right now. If there's no pattern, no trade. No pattern, no trade. So we're going to look at Bitcoin right now, and because number 2, before you enter a trade, is to chart it out on your chart using TradingView. You can use some other chart if you want to, but we like TradingView. So I like to zoom out first, and you want to draw your trend lines to where the candles touch the most. So at the moment, you can see here a lot of talk going on about this ascending triangle, higher lows and lower highs, and whether or not this is actually a bull flag that started all the way up there, a bull pennant, sorry. Yeah, right. So we're drawing in our trend lines. When you're drawing your trend lines into your patterns, you're going to find that they need to touch the most. So when we're looking at Bitcoin right in this moment, we could draw it like this, and this is where it can get a bit subjective, or we could draw it with the candles not touching, in which case we have a clear breakout of this pattern. So there's a little bit of subjectivity or objectivity, Teresa?
Well, we could call it subjectivity. And I actually think it's a good idea to draw both lines. Like, and different traders have different views on this. But you got to remember that these candles reflect the opinions of thousands of traders in the market. And some of them will be trading the candle body, and some of them will be trading the wicks. So both of those levels could be significant in the market. Which is why you see experienced traders often have more than one line on their chart, even though on YouTube we might be only showing you 1 or 2 lines to keep it simple for YouTube. When you actually look at the chart we're trading on, we may have the lines drawn sometimes 2, 3 different ways. Yeah, exactly. Right? Because all of those levels may be significant to certain traders. All of those levels might represent bounces.
Yeah. So with the FUD going on about, are we going down, are we going up, is that subjectivity as well. And on the charts, what I like to do is now zoom in, right? So we've got the daily here. So if we draw the line here, it means we've broken out. But if we draw the line here, we've just touched it. Could we reverse back down now and come back down to retest this bottom here? So now what I want to do is I want to zoom in before I answer that question. And because when you zoom in, you can see things a little bit more. And like even now, regardless of how we've built the chart, the lines, even on the 4-hour, we have actually broken out of this pattern to the upside, and we don't have a lot of trading in here. And Teresa, this is one of the reasons why I'm skeptical about us reversing, right? So this is one of the things I will do all the time. I'll go, oh, is that an M? So that I'm looking at, is it going up or is it a W, right? So that's another way of looking at it. So then what I like to do is go down into the 1 hour if I'm now about to decide what my entry is. Because the entry point is now, like now's the time that you're making the trade. So the 1 hour is going to give you a greater look at what's going on. So here we have a bull pennant. There's no way that's not a bull pennant, right? So I'm going to be watching for that red candle as we're speaking live, is to see whether it's going to drop below or whether it's going to bounce off this and come back up to the upside and continue within this pattern. So that's, you need to be doing your charts, right? There's just no way around not doing them. So if we go over to my really dirty chart, we can, with all my indicators on it, this bull pennant here, it looks like we're breaking out. And these arrows are the previous support lines where we may come down to. Oh, look at that. Ethereum's coming down as well. So as we speak live, we are coming down to test the support line. So normally speaking, if we go back to this chart, how you enter a pattern is you enter either, number one, a clear candle breakout. So if you were going to short this, I personally would not short this right now. There's not enough data. You would short around about here once we get a clear candle below the resistance line that it's just broken through. I mean, excuse me, below the support line it's just broken through. And then we want to see a retest. We want to go, is this a breakout or a fake out? So we want it to come back to retest the previous support line as resistance. Then we want it to come back down, and a conservative approach would be to enter when it breaks through that candle, and that's where you enter because we have confirmation this is the direction that we're going in. Some people, once they get really good at it, will trade the breakout as soon as that candle clears. This is not a breakout because the candle bottom is not below this line here. This could be a fake out, right? So go back to my chart here. So with Bitcoin, if you are not in a Bitcoin trade right now, it is a waiting game, right? Because we have contrary indicators in the market. If you're in a long right now, the long is looking good because we're still creating higher lows, right? Here's a higher low. If this candle falls down to this support line, it's still a higher low than down here or down here, right? And then if we bounce back and we come above this line here, that is a higher high. That's bullish. That means we're going up. But at the moment, we're looking with the steep incline on the indicators, we're looking like this could go down a little bit and then bounce off this line here, which is the 20-day moving average. So at the moment with Bitcoin, there isn't really a clear entry. You can also trade a bounce. I think we're going to use Ethereum for that. Oh, is there anything you want to say about the pattern? So no trade here, no pattern, no trade.
Yeah. Personally, I would not trade a breakdown when there's a support line right below it, like in this case, right? Because we don't know. And so I'm just re-emphasizing what Nicola just said.
Right.
Unless you're scalping, that would not be a good trade.
Yeah, exactly. And that, well, shall we go to number 3, which is putting your indicators in and then look at Ethereum? So that, yeah.
Yeah.
So,
or did we do number 2? Oh yeah, well, draw your charts. Yeah. Okay.
So number 1, what's your strategy? Are you trading patterns? Are you trading the bounce? Are you trading trend reversal? Or are you trading indicators? Number 2 is get the charts done. Draw your charts in, draw your trend lines in, get your patterns done. And if you don't know what they are, there's lots of free things online that you can do for that. We do teach charting and technical analysis in our Crypto Ninjas group. So if anybody's interested in becoming part of our mastermind for Crypto Ninjas, just let us know and we can send you an invite.
Yeah, I think the only thing to add there is it's not a bad idea to draw your Fibonacci lines on too, because often those are major support resistance. Yes. And when you start looking at all of these lines in concert with point number 3, we're going to talk about indicators. then a lot of these lines can become important in terms of how you're interpreting the overall picture of whether you've got a good entry point or not.
Yeah. So the Fibonacci tool on TradingView, it is charting places of support and resistance. And so when we're seeing a fall and when we're seeing a pump, those lines can help us. Generally speaking, with your Fibonacci, I would go to the very top of the market and then go all the way down to the bottom of it for this bull cycle. But just for now, you just draw the line there. This is the top of the move, and this is the bottom of it. Boom. You can also draw the Fibonacci on the triangle. Like, you can have several Fibonacci's going all at once. Or if we were to go on the monthly, you could do one for the entire market. Where do we start the bull run? Where is its highest point? And let me do a Fibonacci from there to see if the Fibonacci's of what's going on in the market now lines up with the history of it. So we would go to our high, and we would go to where we started on the incline. This is a bit subjective as well too. So when you're entering a trade, the rule of thumb is if you're entering a short, you want to be entering under a resistance line, right? You don't want to enter a short right here and then boom, you're going to hit a support line and you could bounce right back up above it. This is why Fibonacci is so good. So if you're shorting, you want to be under a Fibonacci line with lots of room to drop, where there's no support that we could potentially bounce up off of. If you're entering a long, you want to be above the support line, boom, so that you can come back off. And we can look at that actually with XRP next. Oops. XRP on the 1 hour. Right, if you're wanting to enter an XRP trade, because this is looking pretty bullish, you would enter above the support line and below the resistance lines. And there's lots of resistance here, so it's pretty difficult picking up a real opportunity to get in here, because as soon as you get into a trade, boom, you're going to hit resistance and we could fall back down. So this would be a very, very short-term trade if you were going to take it. But you want to aim to enter the top of the support with a clear candle above it. So if you look at this candle here, this would be a good time to enter because it clears the support line. It just touched it, came back up above it. So right there was a good entry point. Again, this candle here, right there is a good entry point because it's clearing here and where there's the resistance. So we've got a ways to go so you could make some money on the way up. Right now on XRP, we're right up against a very strong resistance at 10347. So if you're wanting to play it safe, a good entry is to wait till we break out of this line here. So we'll go over more on XRP, Ethereum, a bit more on Bitcoin and ADA in a moment. But let's get our indicators in, right? So once you've done your Fibonacci, you've got your strategy, you've done your charting, you've done your Fibonacci, now you want to put your indicators in. And let me just go back to the 1 hour. So I'll pull these in as you talk about them, Teresa. Do you want to talk about which ones to go in?
Sorry about that. I was muted. Yeah, let's talk about volume to start with. This is the reason a lot of traders don't trade on the weekend, because if there's not enough volume, the level of confidence you can have in your entry is a lot less. So low volume really increases the risk, especially in a long trade.
This is a volume here, right?
Yeah. So in a short trade, low volume isn't as great a risk, but in general, you want to see volume above the average volume line. So I normally keep an average line across my volume. And you want to see the volume exceeding the average in the direction you're wanting to trade in, as a confirmation that you should be entering that trade. And personally, I think that's one of the most important confirmation indicators is the volume. And a lot of people don't pay attention to it, and they really should be.
Yeah, exactly. We're going to go over, right, once we've gone through the whole thing, we're going to do a recap because I know there's a lot here and you might even want to watch this many times over. So love for you to help us out. We're a brand new channel. So I think we're doing really well. We're just shy of 200. In fact, of this live stream, if you all subscribe, if you're not subscribed already, we may hit to 200, which is really awesome. So, so your indicator for volume in your indicators up here on TradingView is in built-ins. And I think it's called volume, isn't it? Yeah, there it is.
Yep,
volume oscillator.
Volume. Yeah.
Yeah.
Well, volume and volume oscillator, you know, two different indicators, but both really, really useful, right?
Yeah. And then your RSI, your relative strength index, which will tell you at the moment in Bitcoin, we've got room to go up in price, and we've got a lot of room to go down as well. So this is your RSI, relative strength index. That is also found in indicators, built-ins, and just put it.
A lot of traders like to use the stochastic RSI, which is a different type of RSI because it's got two indicator lines on it. I won't go into the explanation of them right now. But when the lines on the RSI are crossing, those can make for really good entry points on long or short trades. A lot of traders trade that as a strategy, actually, but they're great confirmations of whether you're at a good entry point.
Okay. So what is that one called? Because I don't trade with that one.
Stochastics. S-T-O-C-H, stochastic. And it's just another form of RSI. So it's also a momentum indicator. It's just using two different slightly different averages for the different momentum readings. So when the averages cross, and it's usually performing very similar to a regular RSI. I often have them both up, but for sure be looking for divergences on the RSI or their stochastic, and consider that the divergences are usually relative to the same time horizon as you're looking at on the charts.
Yeah.
Like, so if you're getting a divergence, like a bullish divergence on the RSI on the 1 hour chart, you're probably going to see that turnaround within the 1 to 2 hour time frame.
Yeah.
If you're seeing the divergence on the daily, you'll probably see it within the next day or two.
Yeah.
So it's important to keep the time horizon in mind when you're looking at divergences.
Yep. So we're digressing a little bit, but that's all right. So then the other indicators. So what would this say then, Teresa? See how we do have a cross up here of the blue and the red?
Yeah. So that's basically when they're crossing above the major band on the stochastic, which is where the normal volume and normal momentum levels are. Normally, that would be your signal for a short trade. And if they're crossing below, that would be your signal for a long trade. If that's the way scalpers take those as entry-level signals, right? So if you're looking to enter a long trade and the stochastic is at the very top and they've just crossed, that's a good indication that price is going to retrace somewhat. So it's fine to put in a limit order instead of jumping in as a market order. The price is going to come back down somewhat, and you should be okay to put your price point somewhat below what the current market level is.
Exactly. And there is a difference between scalping and doing a trade with a longer term, higher return. A scalper who's really experienced might have shorted this candle here and come all the way down. And it's like, unless you're experienced, you're not going to know this. But look, it got rejected off of the support line, which, as we said, warning, warning, don't short this yet because we don't have a confirmation for a bigger, longer trade. And we did get rejected. We came down, boom, and we've come right back up here with a rejection, confirming this triangle as a support. Now, if you're looking at entering into a Bitcoin trade, if we turn up, boom, coming up here, back into the pattern and onto the upside, you want to be looking at entering right just above there with volume supported right there, so that we've created a higher high confirming a bullish pattern, right? If we come back down all the way down to here, say that, and then we go below that, we've confirmed that we're creating a lower low, which is a bearish pattern. But at the moment we got rejected. Remember, this is the triangle top support. We've just confirmed this previous resistance line as support. We've not retraced all the way back down to this line. We still could. The RSI's got room to drop, but at the moment we've got rejected, right? So now we want to wait at least for another hour or two to confirm the direction before entering up here along. And if you're shorting, a clear candle below this support line. Which is now support, and then it would flip resistance. You want the clear candles below it because it can always be a fake out and reverse around. So then the other indicator, I'm just going to turn that off, otherwise this is going to get busy.
Well, we need to talk about our favorite indicator.
Well, hang on a second. Yeah.
Okay.
So you want the EMA ribbon, right? These are the moving averages. So when we're trading above the EMA ribbon, that's generally considered to be bullish, right? We might come back and retouch this and bounce off of this in the live stream. But if we go into, so that's the EMA ribbon. The other one we like is a support resistance dynamic. So this is like Teresa said, you don't want to be entering into a trade, that has got an immediate resistance or an immediate support that it could bounce off of, and then you bounce into the negative, right? So you put those in. And then when you're entering into a trade using this indicator, I like to go down, confirm my pattern. I know I'm ready to break out. I like to then go into the minute so that I can hone in on my entry point on the minute using these. So you can see on the minute, we've already bounced off this line. We might be heading back up. I'd wait a little bit longer. And then, I would be looking at putting in a long, once we got back into this pattern, possibly. A lot of resistance.
From a standpoint of the stochastic, that's the kind of pattern you'd want to be entering on. If the stochastic is way up at the top of the chart, or the RSI is way up at the top of the chart, just, either put in a limit order below where you're at, or wait a few minutes, because for sure the price is coming back at least a little bit.
But look at this, the RSI on the 1 minute's got a W here, which means short term, within the next few minutes, price is trending up. We're not continuing to go down like we could do, but look, it's already coming back up. So that's how I go in to find out what my entry point is. Have we got any questions? Guys, if you've got any questions on this, we're open to it. I'm Nicola, by the way, and Teresa. I just thought Nicola's on the
label. Yeah, I think that was when we didn't know who was port and who was starboard. Somebody put that comment in. So thank you, because we never know how the rest of the world is seeing us. Yeah.
Once we've got all the indicators, then we'll go look at Ethereum and XRP and ADA, right? And we'll fill out the picture for you. So this at the moment is looking like a fake out. It might not be, but it's looking like that at the moment. So then the other indicator that we like to use is the drum roll, please. The cracking cryptocurrency Ichimoku cloud, because even if you don't know Ichimoku, you don't know trading strategies with it, the guy who invented this and put this together has entered in the buy and sell signals. So once you get your Ichimoku cloud indicator in, you need to come into the settings, go into the plot Tenkan inclusion, plot Kumo cloud, click all of those so you get your buy and your sell signals in. Look at that. Isn't that awesome?
So Ichimoku's been around, I think since the 1920s. I can't remember. It was originally invented for trading. But if you follow the Cracking Crypto YouTube channel, I'm trying to remember his name, but the guy who runs that channel has actually customized an Ichimoku cloud for use with cryptocurrency, and he's made it idiot proof. So it's really lovely. Great channel to follow, by the way, if you're looking for a channel to follow.
Yeah. Sell signals aren't that good on those shorter time frames, but definitely on the longer time frames. Look at this, sell, boom, we went up. Sometimes you'll get a buy signal and it will go down before it goes up, but this is basically confirming there's no trade here, right? We're waiting for Bitcoin. Let's have a look at Ethereum. I'm in an Ethereum trade, and it looks like, what can we say about this that we know of? We broke out of a triangle here, right? One of the reasons why I didn't think we were going to come back down here is we haven't spent a lot of time trading down here. And we had this bull flag, and then now we've come out of the bull flag. We've exceeded its target here at 27.42. We've gone above it. Now we're coming back down, and we're going to retest support somewhere. right? We might come back down to this line and retest it. We might come down to, I don't have the EMA ribbon in here. We might come back down to this triangle. So if you're looking to enter a trade here for Ethereum, you want to be looking at a bounce off here, clear candle off that support line, or a bounce off of this one here on the triangle. Because remember, you're going to go and chart now. If you're not on TradingView, after this live stream, you're going to get a TradingView account and you're going to start to chart, right? You might want to go over this video. So if you haven't liked our live stream right now, we'd love for you to just quickly click like, because we have more people viewing than are liking. And there's a lot of effort that goes into these live streams. Teresa and I do a lot of planning, so we put a lot in, and your gift back to us would be to like it and then subscribe if you want to be part of it.
I gotta say, those of you who have subscribed and hit the notification bell, like, our numbers are awesome for a brand new channel. We really, really appreciate you guys.
We're growing
actually.
at 5% a day, which is unheard of for new channels.
Yeah. So although we're only at 200 subscribers, we're like, wow, that's actually a pretty solid number for a channel that's only a month old. So so thank you guys who have signed up and are sharing the channel and helping us get the word out. We really do appreciate you.
Yeah. So here is all of the places, oopsie daisy, that you can enter depending on your risk management. And Teresa's going to talk about risk management. If we get a clear bounce off this, a candle, like the bottom of the candle is not touching this, it bounces back up. And the RSI is down a little bit down the bottom here, so it doesn't look like it's got more to drop, because at the moment we could drop further. Then that's a good entry. And then another good entry is here. If we bounce off of this and get a clear candle above this resistance line that we've now flipped as support, the best, most conservative and not guaranteed, but almost guaranteed place to enter, which is where Crypto is so disciplined in his entry, is when we come up to establish a higher high, just a few pips above this with a candle close, not a wick, but an actual candle close. Because what can happen if it wicks is it can roll back down again and go into the abyss. If you're trading with the Ichimoku, long is when we're above the cloud, short is when we're below the red cloud, and anything in between is dicey and risky. Thanks, guys, for all your subscriptions. That's awesome. There's Liam. Hi, Liam. link to become. Oh, yeah. Oh, cool. Great. Thanks. I will send you a new link. Awesome. Raphael said the link to Jeroen's course, Become a Profitable Trader, is not working.
For letting us know. We appreciate that.
Yeah. We teach the Ichimoku Cloud, and we actually trade with the Ichimoku Cloud with the signals daily in Crypto Ninjas. So if anybody's interested in my VIP Mastermind, we meet on Zoom 4 times a month. One of those times is where we do clearing of emotions and mindset, and the rest of it is learning the trades. And then daily in our social media, we're posting our trades and entry points and exit points and what have you. It's not a signals group. It's more teaching you how to know when to put in the trades, although I do share my trades a little bit more liberally than I have been. So that is that on Ethereum. So again, there's nothing here showing a buy. The buy was down here. So now we're waiting for this signal here, right? Oh, and by the way, if you're doing Ichimoku, one of the things you need to do is change your indicators, grab your pen and stick this in, because the Ichimoku was made for the stock market, which trades 5 days a week. Cryptocurrency is trading 24/7, right? So you need to come over into the inputs.
It is the inputs, yeah.
Yeah, and your conversion length needs to be 20, your plot Tenkin or your base length needs to be 60, your Kujin baseline displacement needs to be 30, and your this plot Chico lagging span needs to be 120. If you're getting the cracking cryptocurrency Ichimoku, I think it's already
it's already set up to those numbers. But if you're just trading on the regular Ichimoku, you need to change the numbers. These are generally the consensus in the crypto trading world is that these are the correct settings for a cryptocurrency.
Yeah. And then you can go in and change the colors of your candles down here and the colors of your line here so that it stands out for your particular chart, right? So the bottom line is come out of a bull flag for Ethereum. We've broken out of some resistance. We're coming back down to retest something and we're looking for a bounce up to enter a trade if we continue down. I don't think we're going to continue down because Ichimoku is green all the way. And if we look at midnight, oh, bloody hell. Another sleepless night, Teresa. Midnight tonight is when the incline starts getting steep, right?
Yeah,
So that's when the Chinese are coming into full swing. So
yeah,
that's
this might be a night where the Asians dominate the market. You don't know. But yeah, usually often the Ichimoku is fairly solid at predicting what we're going to see coming up. So
yeah.
As Nicola always says, don't mess with the Ichimoku.
Yeah, don't mess with Ichimoku. Cool. So we're waiting for trades. If you're in a long here, great, looking good right now. Let it retrace and bounce off and bounce back up. And if it keeps going down, just hopefully you've got your stop losses in profit already.
Good time to go back to our list, or do you want to go over to XRP first?
No, we've done all of the indicators.
So yeah, but we were going to do 0.4. Do you want to do XRP first?
Well,
I was thinking you could talk about stop losses.
Yeah. 2.4.
Okay. Okay. So just to recap, point 1 was know what your strategy is and stick to it. Point 2, draw your charts. We talked about that a lot. Point 3, what are your indicators you're using to determine your entry? Have a set of them and trade like a robot in terms of checking those indicators. Now, point 4 is what indicators are you using to determine where your stop loss and your take profit should go? So in other words, how do you inform your decisions around your target and your take profit? And some people do this before they even enter the trade. But sometimes you're in a hurry to get into the trade. So then you want to go back and readjust based on what you're seeing on the indicators. So first on this list is our personal favorite, Ichimoku. Especially if your entry was based on the Ichimoku confirming, I would never have a stop loss closer than the other side of the Ichimoku cloud. Because it usually acts as support resistance. So having your stop loss on the far side of the cloud is usually one of the first things that I look for. And if it's a very narrow cloud, I go even further out from that. But if it's a nice wide cloud, that cloud is usually one of the best indicators of where the market's going to move within. Next,
just typing in the chat box, guys.
Okay,
I just put in hello. I just put in the Crypto Ninjas website, so you can go and check that out if you want to join our mastermind. And I'm just putting in Jeroen's pattern trading course, where he teaches you all the patterns and how to trade them in here as well. Somebody said the link wasn't working.
Okay, my next most favorite indicators to look at take profit and stop loss. Well, and of course we did the charting. So for example, depending on what you're trading, every pattern has a target, right? So if you were trading a bull pennant, the target is the flagpole, etc., right? So you want to look at the target of the pattern, but I like to also look at the VPVR, because VPVR gives us where the majority of traders are placing, like what price points the majority of volume is at in the market.
I don't have that indicator on my chart.
Yeah, Nicola uses a similar indicator. I think you use the oscillator to do the same thing, right? To see what levels of the market, or do you want me to show the VPVR on my screen? Do you want me to share my screen for a minute?
I have this one here.
Okay, yeah. So the VPVR just gives you your volume profile laterally in the market. So you can see what price levels all the volume's at. And especially when those start lining up with the Fibonacci levels, lining up with the other lines that you've drawn on your chart, when you see convergence of multiple indicators, that's a pretty good indication that those are spots that the market's going to bounce at. So those can be really good positions. So if, for example, a ton of volume is below the pattern you're trading and it's a long, you probably want to put your stop loss on the far side of that. And your take profit, you might want to put just under where all the volume is to make sure that, you know, all that volume doesn't stop just shy of where the target is.
Yeah. If you're using the Ichimoku, their thing is you've got your, like, let's look at it long here for XRP, for example, because XRP's come down out of a descending triangle. It's broken out into an ascending triangle, which is a bearish pattern, which means it will break down. But the target for this is up at $1.10, right? So this is a nice long, even though this Ichimoku cloud is saying sell right now. Usually that's a short sell. I've actually not seen it to be too reliable. The buys are reliable, but the selling on the short-term time frames aren't as reliable. So just ignore that.
Yeah, you normally wouldn't short when you're above a cloud in a bearish formation like
inside
that.
A pattern
anyway.
at the bottom of the pattern.
And you normally wouldn't long if you're below the cloud and the cloud is looking bearish. So I think ignore the signals it's giving you if the rest of the indicators aren't there.
Yeah, that's a good point. It's a really good point. So yeah, so when you're doing stop losses, there's a lot to be said for stop losses. We know that there is stop loss hunting going out there. So if you put in tight stop losses, you're more than likely going to get stopped out of the trade. You can see that, you know, we have a lot of volatility whenever we enter a trade anyway. It goes up and down. You may be in the red for a day, but you want to be watching the patterns for that. But generally speaking, on the Ichimoku, the stop loss, the Ichimoku, these are support and resistance lines, and the cloud is just what's in between, right? So we've got tremendous amount of support down here at 94.78 cents for this Ichimoku cloud. So if you're doing a long for XRP, you would put your you put your stop loss under this. So we come down and we touch it, and it comes back up, you're still in that trade and you haven't lost the trade. So I know that a lot of you follow Marzel Money, because I know a lot of you have come in from that Discord group for today. This is one of the things he does when he puts his stop losses in, is he puts it right at the level where the whole movement would potentially not move back down to, unless obviously there's manipulation in the market. Risk management is the next point. So should we talk about risk management? Because at the moment, there is no trade for XRP, but if we come up above this resistance line at 103.47, because boy, do we keep hitting it. Look at this, boom, down, up, down, coming up, getting rejected. We've been getting rejected from this point a lot. So this is a really strong resistance. It's going to need volume in order to break it. If you look at the Ichimoku, we're starting to get an incline. Sometimes this can correspond with upward price motion. So if you're looking to get in on XRP, the entry point would be above a clear candle break above the 103.47 if you're game, and a retest of that as support. Come up, come back down, retest it, bounce back up of it if you're a little bit more conservative. Oh, excuse me.
Yeah. Sorry, go ahead.
Yeah, let me just zoom out with, here's the thing with XRP that you've got to be really cautious of. That would be a short-term trade to $1.10, by the way, because we wicked up to $1.10. We never traded yesterday, I think that was, or a few days ago, because on the 4 hour, we're still under Ichimoku. Right? And we're coming into it like within the next 4 hours, we might enter, which means this is going to be slow. Once you get into the red Ichimoku cloud, it's slow. There's a lot of resistance. So we've got tremendous amount of resistance for XRP. It's going to take volume. It's going to take news from the SEC to break through this. So if you're entering into a trade, if it was me, I'm already in one. So I got down the bottom here. But if you're not in one, I personally would wait till we clear $1.05 maybe even $1.07, because this is a big triangle here, and we've got many days before it comes to its pinnacle. So we might not be due for a breakout here. We might actually be due for it to come all the way back down and retest the bottom at 91 cents. Or if we end up retesting it up here, we might retest it at 92 cents, right? And then come back up and trade here. So we might not break out without news here. So this is a waiting game, potentially a short if we get rejected off of this line. But the problem with shorting below 1.3, unless you're scalping to $1, is there's a lot of resistance on the way to $1. Lots of stop off points where it bounces back up of. So this is
that's a really, really good example too of, like, it's important to remember that the edges of the Ichimoku cloud often act as support resistance. So entering a trade when you're just below the edge of the cloud, if you're entering into a long, would be a pretty risky proposition, because the odds of it bouncing off the edge of that cloud are pretty high.
Yeah, exactly. Once we do break this here, we could get a $1.4166 target. And I think if we break $1.32 or $1.34 even, we may go up even higher, because you remember we're expecting by the 6th of June for discovery on Ichimoku, the discovery on the SEC lawsuit against Ripple, to come to an end, and then there's going to be some kind of decision as to whether or not there's enough discovery to proceed with the court case, or whether it is going to get dropped, or whether or not there's going to be some kind of a settlement. The pinnacle of this is the 10th of June, which is interesting because that is Mars is doing something spectacular on the 10th of June, and Mars is all about drive, movement forward, and it's fast movement as well. So we wait to have a look and see how that's going to impact us. So that's awesome. So do we want to talk a bit about risk management and this whole Wyckoff thing? Because I don't know if any of you follow Crypto, but he's one of our favorites. We got to meet him when we were in Mexico last month. Him and Da Vinci J15, we hung out with them for quite a bit, so that was really awesome. And we were also going to be doing a big crypto conference events for traders, and they're going to be two of our keynote speakers. So we'll have more for you on that. But Crypto Chris just put out a video about how he sees another Wyckoff pattern forming, which is indicating bullish momentum, which might invalidate the final phase 5 of Wyckoff. And this is what I found. Remember, Wyckoff was designed for the stock market. I've seen this over and over again with the Elliott wave, 5th wave impulse down to the downside. It gets invalidated with Bitcoin. It's kind of like Bitcoin's going, yeah, you're all expecting me to go down. I'm going to make it look like I'm going down. And then it goes, nah, I'm going up. See you later, right? So that 5th wave often gets invalidated in crypto, whereas in the stock market, it doesn't often get invalidated. Does that make sense? And Chris is saying we've got another one forming, which is potentially bullish to 40K and a big retracement at 40K. So the whole concept of going back down to 20,000 made sense for a while, but now we might not be going all the way down there. Yeah. Yeah.
And I think shout out to YouTuber Uncomplicated, because I think he was one of the first people to recognize that we were in a Wyckoff distribution, and that there might be, because ultimately the reason Richard Wyckoff did all this research and started to show these patterns to traders was they were reflective of a market manipulation that's going on by the really big powers in the market, right? So ultimately, when you're in a Wyckoff distribution, there's market manipulation going on. Well, no big news. We're in an unregulated asset that we're trading. Anytime you're trading cryptocurrency, it's unregulated. So we know always when we're trading cryptocurrency that they're very prone to market manipulation, right? So you just got to know that as a trader going in. But that's very important. That's why our 0.5 of the 5 things to consider before you enter a trade was risk management. What's your risk management strategy, and how are you going to view this trade? Because you are in a scenario where market manipulation may be going on. So it's really important to consider your risk management carefully.
Exactly. One of the things I always do, as soon as we hit 25% profit, I move my stop loss 100% into just above 2-3% profit, so that I break even if we close out and we come back down. And then if the trade's still good and we come back down for a quick retracement, I just have to re-enter. And again, that's one of my risk management strategies. And also, best practice for beginners, I believe, and that's what I was taught and what I started out with, is 5% of your trading portfolio only in any given trade. So you've got your hodl position, you've got your position that you are the coin that you are spot trading, you're buying and selling to accumulate the coin. Then you've got your coin that you are leverage trading, which is highly risky. So you want the smallest portion of your portfolio in that, if you're just beginning, until you've proven that you can be profitable month on month. So if you did 5% of that portion of your trading portfolio, then each trade is only 5%. And then if the trade is good, you can always add to it, right? And that way you've got some kind of risk management going on there. So if you lost 5 trades and you won 5 trades, you'd probably just break even, or not quite, because when you lose bigger than when you win, right? That's usually the way. And you have to have extra percentage in your wins to counteract the losses that you've had. So if you're only using 5% of your trading portfolio in any given trade, you've got money to come back in the next trade to make it back several times over. And then once you feel more comfortable and you're more experienced, 10%. And when you hit, do you want to talk about all in? Because you were the one that taught me this, right? When you hear traders say, I'm going all in, it does not mean they're going all in with every single last penny that they've got, their grandmother's savings, and a second mortgage. That's not what all in means.
Yeah,
Take it away, Teresa.
It's important to define what all in means for you, right? Because in the crypto space, often, especially if you're a newer trader, tight stop losses are just a recipe to lose a lot of money, because there's so many wicks up and down. So a lot of traders do, like, because the two major elements of risk management are always how big is your trade and how tight is your stop loss. Like, those are the two major components of risk management, right? That plus, plus making sure it's a good trade in the first place, which is our other 4 points, right? But you want to think about under what circumstances would I ever go more than 5%? So like experienced traders might consider all in 25% or even 40%. But normally what you're doing, if you hear a trader say all in, is once you've gone to a certain level of profit, especially on bigger multi-day trades, like, because if you're doing huge patterns, big breakouts, if you get to a certain percentage profit, Nicola's rule is 25%, mine's 20%, but you have to decide that rule for yourself. When you get to a certain level of profit, you move your stop loss up just into profit, then you can add to the trade. So if you start with a 5% trade and you know you're nowhere near the target, there's still lots of room to head to the target. Now you can add another 5% or even 10%, depending on how experienced you are. So a lot of traders, when they say I'm all in or I'm going all in, doesn't mean they're doing that out of the gate. That's super important to know, right? A lot of you watch Crypto and he talks about these big legendary trades he gets into. We got to interview Chris on this one of these days, but I would bet dollars to donuts that he's scaling into those trades. So he's probably keeping a smaller trade open. And then, once the bigger breakout's happening, he's adding in and leveraging up. Once the stop loss is in profit, he's adding in and leveraging up. So you normally don't go all in just based on intuition or hunch. That would be extremely risky. And you've got to create your own definitions. And the newer you are as a trader, the more conservative those definitions should be.
Yeah, exactly. When you've proven that you can make a profit, you can take bigger risks. So just to finish up on XRP, we have a beautiful W, boom, boom. So this is a pattern reversal, and it's a beautiful trend reversal rather, because we've got the bottom in here, and then the W, the next time we come down is a higher low. So this is gorgeous. This is telling us we're heading for blue skies. Again, though, could fall back down here to test this. Not sure if we do. If we do fall back down to test this, this will invalidate this W pattern, which is why I'm thinking we might just break through this and not fulfill the rest of this pattern. We shall see. But in terms of adding to the trade, I would be looking at adding to the trade once we get a clear candle, a close $1.10, because we are, in, as far as the Ichimoku target and the triangle target, the ascending triangle target is up here at $1.4175. It was at $1.42. I don't know why I've got, oh, that's right. The Ichimoku target is there. So I might take some profit here and then wait and see if it goes up higher. Now, between here, down the bottom of here of the support or this resistance here and here, we may create some more patterns which take us even higher. So you might always be moving your stop losses up. So if we come back down, you close out in profit, and then you move your take profits up as the new patterns perform. So last but certainly not least is one of my favorites, and that is Cardano. This one's tougher. Have you been looking at Cardano lately, Teresa?
I have not. No, I have not been paying attention, which is surprising because Cardano is my love. I think they're one of the most awesome coins out there. It's been a busy week. What's
great about Cardano is that it's starting to decouple from both Ethereum and XRP, Bitcoin is what I meant to say. Let's bring this down. So let's go, always go out, like before you even look at trading, I like to go out to the daily, and then I look at the weekly and the monthly, probably about every 3 days. We have a potential bull flag forming here. Let me just hide. Here it is here, boom, this green candle down here, and then above here, we are above the EMA. We're about to go into a steep decline. We could get a little bit, see down here on the Ichimoku cloud, we could get a little bit of a decline, which means if we're doing a bull flag, it could come back up to the bottom, come back down to the bottom. So if I put my lines back in, right, this is the daily, guys. So daily patterns are bigger moves. So if we are, oops, if we delete that, if we were to have a look at that move, we're not quite sure where those lines are yet because we need another day candle unless we break out. We would be looking at, this is a good time. If you're hodling, I will probably be doing a big sell-off right here unless we keep going up to come back, buy back in on the retracement. But if you're looking at a leverage, that takes us to $2.16. However, we have been trading in a downward channel, which is broken to the upside, which has a target of the top of the channel, which is at the all-time high at 245. And of course, once we hit the all-time high, we get rejected a few times and we go through, then we're back in price exploration. So if you're looking at entering, based on what we've been saying today, we want to see a breakout to the upside of this flag. We want to see a retest of this line here as support, and then another candle above, and at least an hourly candle above oh, hang on a second, I'm on the daily. Take all of that back. This is a daily. We need to go back into the 4 hourly and the hourly. So based on the daily, somewhere between today and tomorrow is breakout point. On the 4 hourly, we still have this resistance cloud underneath, which is why we're making slow progress. But Ichimoku put in a buy order at $1.7164. So I might look at coming in on this once if the candle comes back down here. What I do in this instance, if I'm a little too late to the party, is I'll look at the 1 hour now. Sorry about the time it's taking. TradingView recently has really slowed down. I don't know if it's because I've got a lot of charts or what. Oh yeah, look at this. On the 1 hourly, we've touched the EMA, got rejected and come back up. So I would be looking for a candle above this if I was going to come in for the long haul. Very risky though, because it's in the middle of a pattern and normally you don't want to trade the pattern. We have an incline coming, so I might wait a few hours till about 1 o'clock in the morning for me. to see if we're going to come down a little
Might
bit
be a night to
further.
get up in the middle of the night. Yeah.
I
Love
don't
it.
like. But basically, we're a little bit late to the party if you're not already in along here for Cardano. The time to have gotten in, for the best time to have gotten in, was $1.60. But there's another opportunity in the market, as Da Vinci J15 always says. The market always gives you another opportunity to come in and trade. So the next position for conservative approach would be a breakout of the bull flag resistance, flip its support by coming back down and retesting it, and then bouncing back up off it. And let me just draw that out for you.
And I apologize, folks. I'm going to have to hop off the call because I had a commitment I couldn't get out of at the top of the hour. I'll see you next week, and I'll let Nicola finish up. Goodbye, everyone.
Thanks, guys. Okay, cool. So yeah, so the entry would be if all of the indications are showing huge green Ichimoku cloud, RSI got a lot room to move at the bottom. You could move at the breakout candle, making sure the bottom of the candle clears this line here. That's one place. That's risky, right? It's risky because we can always come back down into the pattern. But if you want to be more conservative, you wait till it goes up, comes back down, retests this as support, and then comes back up and clears the pattern. Every now and then, ADA and XRP do not come back to retest. So you just want to get into the best position you can if it's starting to take off. If that's the case, I like to go down to the 1 minute to see what's going on in the 1 minute, to see if there are any potential dips coming up where I could enter. Right? And in this instance, in this instance, there isn't. We're up against this resistance line, so this is not a good time to enter. You want to be above resistance to enter a long, and below resistance to enter a short. So then I would go to the 5 minute and see, because Ichimoku is projecting what price is going to be in the future based on the elements. I would look at this here. Once we got into this little here where we're starting to incline, where are we? And the reason I would do that is we have on a 5 minute a little bit of a potential bear flag, maybe. Whoopsie, which means that we could be coming down further, or at least come down to retest, in which case, normally speaking, you don't trade inside of a pattern, but because the support and the resistance line are so far apart, you could trade the bottom to the top as a long, and then the top to the bottom as a short. So that's where I would be looking. I would be looking at an entry point around here, clear candle, bounce off this line with another candle for me showing a green candle going up, knowing that we've reversed the downward trend and we're heading back up again. So don't have any questions on here. You guys are all quiet on the Western Front with the questions. But that's it for our TA. If you were new or came in halfway through, highly recommend you go all the way back down to the beginning, because we went over all of the things you need before you enter a trade. What do you need in place? What do you need to do? What do you need to consider? How do you manage your risk management? And if you consistently go over every single one of those things we mentioned today in your checklist, and then learn from market turnarounds and market manipulations and so on, you get better and better and better at your entry points, and you get better and better, obviously, at making a profit. So I'm just going to finish off on mindset, because we always like to talk about mindset on Conscious Crypto Traders. There is so much FUD and so much noise and energy around this fifth wave of the Wyckoff, which is one of the reasons why it might not play out. It still could, but it might not, because whenever there's so much FUD in one direction, there are people, whales, powers that be, that love to manipulate that. So people are shorting. They come in, place big longs, short everybody out, get everybody liquidated, and come in and just dominate the market and send it up into a bull rally. So look at the pattern, no trade, right? Look at the pattern. I think that if you're a beginner, that's the best way to start trading, because there's a little bit of predictability in it. Not a lot, but there's a little bit. And then you look at the indicators that we mentioned today to show you, how to monitor the trade as you go, how to enter, and where to set your stop losses. So yay guys, that's it from me today, and Teresa's obviously departed. We will see you next Wednesday, 2 o'clock Mountain Time is when we do our weekly live streams. We do spontaneous live streams as we go, and we upload videos twice a day that are tutorials on technical analysis, scenario trading, what's going on in the market, what scenarios are happening that could affect your trades, and the mindset component. And again, if you are interested in learning more about our private mastermind group, we get together on Zoom 4 times a week, a month rather, 4 times a month. And then we have daily discourse in our social media with our postings, our signals, and trading, and mostly teaching you how to get better and better at entering and exiting trades so that you can become profitable. That's tradingcryptoninjas.com. The link is in the description below. And I'm going to see you. Bye. Hey, great. Thanks, Jeffrey. Thanks, Rafael. Oh, that's awesome. Oh, thank you. Thanks, Liam. Thanks, Valma. Hopefully I pronounced your name right. That's awesome. See you again soon, Uni. Bye-bye.